But what we're going to do now is we're going to go and you're going to see why I kept banging on about this employment and inflation and those two mandates that they have, because it's mentioned in the statement. Okay, so that's why it's important that I mentioned it. So what I want to do is I just want to go over to this statement. So we already know now they've got these tools at their disposal, right? With the balance sheet, the federal funds rate. Okay, just remember this, and honestly, you'll be so far ahead of anyone. Federal funds target rate, which is the short end of the borrowing curve. The long end is the balance sheet, which I've showed you many times, which is that, right? Which is kind of the purchases of, recently it's been, I think 80 billion treasuries and 40 billion mortgage-backed securities, but they've been reducing those recently. So they are trying to, they're still expanding the balance sheet, but at a slower rate. And recently they've been talking about bringing some of this down, okay, actually reducing it, which means obviously they can't purchase anymore. They're going to have to start selling some of these reserves. But again, they don't want to just shock the market and do that. They will communicate that, hopefully, when they do that. Remember those two things. So you need to remember the tools at their disposal, the mandate, what their boss, Congress, has told them to do, which is maximum employment and 2% inflation, and then you're good to go, right? You'll have a very good idea of which way they're likely to be going towards more aggressive monetary policy, i.e. raising interest rates, dovish or soft or supportive monetary policy, i.e. lowering rates. That's how these guys are thinking. If you know that, you'll be able to read the statement much better than anyone. So what you do is the FOMC obviously has this meeting, right? We all know that. Very important. 8 times a year they'll get together. They'll have a chat. They'll look at data together. They'll have assistants. I think they've got research assistants and whatever that will do all this analysis and help them and whatever. And then they'll have a meeting over 2 days, and then they'll decide whether to change the interest rate or not, or whether to use their balance sheet more aggressively or not, which we've what's that balance sheet gone? Balance sheet, it's like my favourite chart, isn't it? And it really is. This balance sheet, whether to use the balance sheet more aggressively or not, whether to shrink it, expand it, and also just let you know their thoughts during the meeting on what has to be employment and inflation, because that's their job. I'll keep saying it. I'll keep saying it till I'm blue in the face. Okay, it's completely changed everything for me when I just one day it clicked. It took me many years. Honestly, I was useless at this stuff. I just couldn't get my head around FOMC rates, what they're doing. They must be thinking of a million things. No. Maximum employment and payrolls, job data, right? Or unemployment rate, BLS Friday, first Friday of the month, the jobs data, and then inflation data, obviously that comes out. So let's go and have a look anyway at a statement that was released, the last one, which for me, okay, so I'll show you. For you, it will be, I don't know what it will be for you, so obviously you can have a look at that. Okay, so here, the federal funds rate, they didn't change it Wednesday, January the 26th, although there've been a lot of talk in the market that they are going to start reversing rates, and maybe rates will be much higher when you come to do this. But what you can do is you can go here, see that the statement, doesn't matter which one you look at, you can look at that, click on latest release, or you should know this website better than anyone now, so you can just find it, monetary policy, meeting calendars, and it's right there. 2022, yours might be 23, 24, 25, 26, I don't know when you're watching this, because the way I'm building this is something that really will last, right? Don't really want to have to go through and do 4-hour lectures all over again, just because it's a new year. Completely pointless, right? This is relevant regardless of the year you're in. So you go to your latest meeting and the statement's right there. Okay, so you can see historical statements. Can you see them there? Okay, so we'll have a look at this together. Now, what you need to understand, okay, is, and I've said this in the Pro and Foundation, but it applies even more here. The reason why pretty much 99.999999, and I can keep going on, % of traders fail, because they're looking for some sort of indicator to tell them, hey, if the statement says this is complete and utter nonsense, okay? Not how this business works. You're gonna have to do your own analysis. Okay, there is no, if the statement says that, if the statement says this, no way. You'll be going round in circles for the rest of your life, trying to make markets work for you. Don't work like that. You're going to have to, and in this course, that's why I'm not really going to be doing that much analysis. Okay, I'm giving you the tools to do the analysis, because every statement is different. Okay, there's going to be changes, there's going to be subtle changes the Fed makes. I'm going to teach you how to study that, but ultimately it's very qualitative, right? Fundamental data, things that are happening, they're dynamic, they're changing all the time, and you can't put a template or an indicator on this. It's completely ridiculous. Okay, the best I can do is spend all these hours with you teaching you what this stuff means. You then need to actually go and read it, put in the effort, and apply some logic. Okay, and you will be able to do that, don't worry. That's why I've spent so much time with you. So look, let's go through the latest one together. Okay, in fact, let's just read it, right? Indicators of economic activity and employment have continued to strengthen. Okay, so can you see straight away what are they talking about? GDP, employment, right? Payrolls. First line, okay, they're talking about payrolls. Okay, and you need to understand that. That is why I cannot stop going on about how important this is, this payrolls number. Because this is their job. Their job is to make sure what? Unemployment or employment is maximized, right? First line they've mentioned it. So can you see, they're already hinting to the market, oh, okay. So I'm getting a kind of look inside that committee room, right? They were discussing this. They've obviously all kind of thinking that employment continues to strengthen. The sectors most adversely affected by the pandemic have improved in recent months, but are being affected by the recent sharp rise in COVID cases. Okay, so it's kind of like they're starting off strong and they're saying, but COVID cases have recently risen. So this is the Omicron cases. Job cases have been solid. Job gains have been solid. Unemployment rate has declined substantially. Can you see they've talked about jobs about 5 times already in the first 4 sentences? Why? What is their mandate from Congress? Maximum employment. Okay. They are doing their job. Their bosses told them maximum employment. That's what they're doing. So by understanding employment and picture, you're going to get far ahead by actually reading what they're saying in terms of employment and obviously prices they'll talk about in a moment. I think supply and demand imbalances related to the pandemic, reopening the economy have continued to contribute to elevated levels of inflation. Here we go. It's almost like clockwork, isn't it? Employment and price stability. Overall, financial conditions remain accommodative. Right. So what they're talking about there is the balance sheet. Not only that, 0% interest rates. Right. The federal funds target is 0. For me anyway at this time, 0 to 0.25. Okay, so essentially 0% interest rates, and also where is that thing gone? Sorry, I seem to have lost it again. But the balance sheet, right? And this time I definitely don't seem to be able to find it. Don't seem to be able to find it. Here it is. So balance sheet, they still continue to expand their balance sheet, albeit at a slower rate. So financial conditions remain accommodative, in part reflecting policy measures to support the economy and flow of credit to US circular flow of income. Okay. Path of the economy continues to depend on the course of the virus. Yeah, fine. Progress on vaccinations and easing of supply constraints are expected to support continued gains in economic activity and employment. See again, GDP, employment. They're always thinking, how is employment doing? How is GDP doing? How is inflation doing? Right? Risks to the economic outlook remain, including from new variants of the virus. Fine, nothing new. Committee seeks to achieve maximum employment and inflation, 2% over the long run. Support these guys, and they always say this, okay? And I'm going to show you an excellent tool Actually, I don't bother reading the statement anymore. I prefer to read the changes in the statement, and that's really much more crucial. Right? Because if they're saying the same thing every month, it doesn't really help me. I want to know what they said different to last month, and I'll show you that. But this is the first time we're reading the statement together. So I just, when I used to read this statement, I used to be very like, how do I say it? Intimidated by it, right? And I don't know if you're the same. I'd be like, oh, this statement is so confusing. How do people... It's not at all, right? The stuff I've just taught you for the last 4 hours, this should be... This is nothing. Oh, this is what Envy's been talking about for 4 hours. It's the circular flow, it's employment. Okay, yeah, inflation, great. Balance sheet, okay, I can see that. Federal funds rate. In support of these goals, committee decided to keep the target for the federal funds rate at 0 to 1/4%. Oh yeah, Envy's just been talking about that for the last 2.5 days with me. Inflation well above 2% and a strong labour market. The committee expects it will soon be appropriate to raise the target rate. That is a big statement to be making. Do you see what they're doing? They're hinting to the market there about raising interest rates. And you're going to see, I have actually looked at this statement earlier today, and I did notice that. They didn't say that in the last statement. It was kind of expected to be said, to be honest, with the inflation rate persistently being high and some of the kind of language that they've been using, just chatting generally to the market, the FOMC, through their various, like some of the committee members will give little... I don't know what it is, at these little get-togethers they get to. Sometimes they'll talk to the press and stuff, and you hear things chatter, and obviously there has been a little of this bit of expectation building that they will be announcing this, but it's nice to see it here in the official communication. The committee expects it will soon be appropriate to raise the rate. Why is that? Inflation well above 2% and a strong labour market. Do you see? They're not meeting their goals. What's their mandate? Got to keep inflation around 2%. It's now well above 2%, okay? Stuff we've been talking about for ages. So obviously the committee is now getting quite hawkish or aggressive on interest rates. It needs to cool the economy, it needs to cool prices down. So they're going to start potentially, it will soon be appropriate to raise the target rate, okay? The committee decided to continue to reduce the monthly pace of its net asset purchases, which is this, my favourite chart. Do you remember we said open market operations, the tools available to them to lower longer term interest rates? That's what they're saying here. What they're saying is that the committee feels it's appropriate to continue doing that by at least 20 billion per month. Treasury securities and 10 billion. Do you remember I said to you before it was 80 and 40? They've reduced that all the way down now to 20 and 10. So they're still buying 30 billion of assets from the market. They're still pumping 30 billion into the market every month. So this is increasing their balance sheet, but it's at a much slower pace now. And they're going to give a comment about that here. I think Federal Reserve's ongoing purchases of holdings of securities will continue to foster smooth market functioning, etc., etc., and accommodative financial conditions. Why? Right? Pause this. Why would that purchases continue to do that? Support financial conditions, supporting the flow of credit to households. Why? Okay, hopefully you've paused and come back. Because what? It's putting pressure on longer term rates to keep going down. Remember? Or keeping them down, which makes it cheaper to borrow, right? For the things like mortgages and house purchases and car purchases and things you might use long-term rates on. Okay, so that's why it supports the flow of credit to businesses. In assessing, see, nothing to these statements, right? Don't need to be intimidated by them. Very straightforward. What isn't so straightforward is knowing how your colleagues and your competitors, the other traders, are going to react to it. Obviously, that can be a complete nightmare, but just understanding it. Okay, very straightforward. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. No shit, Sherlock. Obviously, they're going to be doing that. So again, it's just standard stuff. The FOMC, obviously, they're going to monitor incoming information. Point is, we need to know what information they're going to be looking at most. Well, How many times do they just mention employment and inflation? A lot. So they're going to be looking at employment and inflation. Okay, that's why I said to you, this is crucial that you remember. I said to you, forget about everything but this, because that will pretty much give you, at least for the first 6 months, and if not longer, it will give you the tools to almost get inside these people's heads, like, without having to overcomplicate things, because that is ultimately their job. Okay, so that's going to be the incoming information they'll obviously be looking at. In the main, obviously they will look at lots of other things, but in the main, the committee will be prepared to adjust the stance of monetary policy if risks emerge that could impede the attainment of the committee's goals. Like I said, always pleasing the boss, Congress, right? The assessments will take into account a wide range of information, readings of public health, labour market conditions, inflation, and financial and international developments. Okay, and that will say who was there. Then the FOMC is just directing the desk. Okay, so that's the Federal Reserve banks underneath it to continue to do this stuff, basically, the trading desk. Okay, and then the vote at the bottom. Okay, in relation to the action, blah blah blah, they voted unanimously to keep at the existing level. Okay, basically. So that's the statement. Now, one thing you can do, right, what I like to do, it's a little trick for you, a little hack, okay, is when I go onto Google, let me just, what I type in is, I will type in compare FOMC statement. Okay, can you see that? So I go into Google and I do compare FOMC statement, and actually you can do this if you want, but I like to put tools, little hack for you, anytime. I like to do the past week, because then I get, well, let's do the past, whatever. I mean, basically, you just want to make sure it's the last statement. Can you see side-by-side comparison of the last two FOMC statements? I don't even, never been on this website. You need to be a subscriber. Don't worry about that. Don't be paying for anything. Never pay for this stuff, okay? And I'll show you that as well when I show you where I get all my economic research from. Don't pay for it. Complete waste of money. I never pay for research. And you've seen my institutional Sundays, everything. I don't pay for any research. Okay, a lot of people think I pay thousands, but I've got clever ways of finding this stuff. If you're willing to look hard enough, it's all out there. Here's what changed. Okay, so this is, you see that? Here's what changed in the new Fed statement. All right. So the reason I say obviously do the past week is to make sure you get the right. It's obviously going to be the most recent one you want. So in Google, I change it to the past week. Okay, can you see this? This is a comparison of the statement. Okay, let me just download this. Give me a second. Just need to download it. You can download this actually. It's quite handy. See, it says download. You can download that. Okay. And you see it just download basically, and you can open it. Okay, let me just make sure I'm not covering anything. That's good. Okay, so basically, the stuff in black is exactly the same, okay, as the last statement, and I'll show you that. Okay. In fact, you can do this exercise as well. Get two statements side by side. You see they're always very, very similar. It's not brand new statements every time. A lot of the times it will be very, very similar stuff. They'll be saying the same things because much won't have changed. And what I'm doing is I'm just pulling up the last two statements. Just give me 1 second. Okay. And I just want to make sure I'm not blocking this. Okay, those are the last two statements. Okay, so can you see here? Just give me a second. Sorry. Let me just bring up the PDF. Sorry about it. It's easier when I've got plenty of screens, but obviously because of the teaching, I'm having to just use one screen here, and I will make sure we get them all side by side, and then we've got the comparison. Okay, so can you see they've deleted this bit? The Federal Reserve is committed, blah blah blah. This is the same. Indicators of economic activity and employment. Okay, can you see it? Indicators of economic activity and employment have continued to strengthen. Indicators of economic activity and employment have continued to strengthen. The sectors most adversely, can you see it's identical in both statements? All of this. Blah 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 blah. Indicators of economic recent sharp rise in COVID-19 cases, the stuff we just read. Okay, so basically you can see what is exactly the same. Okay, the path of the economy continues to depend on the course of the virus. I'm just showing you that all this stuff in black is exactly the same in the last statement and this one. The path of the economy continues to depend on the course of the virus. They've said that here. The path of the economy continues to depend, progress on vaccinations, blah 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 of the virus. You see that? It's identical, right? The point is, so as traders, a lot of institutional traders, they're not going to pay attention to the stuff that's the same. They'll be like, well, I knew that already. What they want to know is the change since the last statement. Okay, and I just wanted to show you that this stuff in black is identical. So what people will be looking at is this stuff in red. Okay, so since the last statement, they decided to get rid of this. Okay, Federal Reserve is committed to using its full range of tools to support the US economy in this challenging time, and thereby promoting its maximum employment. They've got rid of that, maybe because the statement was getting too long with some of the changes. There's nothing really there that you need to worry about them getting rid of. Okay, it's not significant. We already know this stuff. We know it's committed to achieving maximum employment, okay, and price stability goals. So fine, no reason why they shouldn't get rid of that. Just maybe tidying up the statement a little bit. Indicators of economic activity, blah 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 blah. The sectors most adversely affected by the pandemic have improved in recent months, but are being affected by continue to be affected by. So do you see in the last statement, they said continue to be affected by COVID-19. This is new. Recent sharp rise in COVID-19 cases. Do you see? It's interesting. You know now. Can you see? I don't need Bloomberg or anyone to tell me that the committee is concerned about COVID cases. I can see that. They've put that into the statement. Do you see? It's a new thing they've put into the statement. Recent sharp rises in COVID. So I know straight away. Do you remember I said you got to put yourself in their head? This is part of the analysis, I guess, section, but let's just cover it now anyway. You could be thinking to yourself, oh, okay, they see that as a risk. So it's something they're concerned about. So I also probably just keep an eye on COVID cases, okay? Then we can go further down. Just trying to think, what the FOMC guys and ladies there are thinking, right? With inflation, you see, before in the last statement they said having exceeded. They now changed it to well above. You see, that is quite a big statement to make. They're now admitting openly, what? Before it was, well, it's exceeded 2%. Now they're taking a much more vigorous, hawkish stance on it. If Congress has said to you, well, you need to keep inflation at 2%, they're clearly concerned that it's well above 2% and they're openly admitting it. What's the market going to think? These guys may be raising interest rates soon, or maybe thinking about being more aggressive with rates. They have to be able to meet the goals of Congress, and they've openly admitted that. Okay? Can you see they're giving clues? You're getting inside their head. They're worried about inflation because they changed the language to well above. The committee expects it will soon be appropriate to raise. Do you see, before, what did it say last time? Maintain Now it's saying raise. It's the first time they've used that language. That's a clear signal to the market. We're thinking about, man, we're going to be raising interest rates, okay? And in fact, it's fascinating. If you look at, market expectations of federal funds rate, and a lot of this stuff obviously trades in the market, you'll see the market is already pricing in that the committee will be raising the rate at the next meeting, even ahead of them doing this. So all this does is reaffirms it for the market, because the Fed has been doing a very good job of kind of hinting here and there through press conferences and through little things and talking to the journalists and this and that, just slowly hinting that they are concerned. And little changes as well that they made in the last statement as well were quite aggressive as well. So they've been hinting at it quite a lot. So that's why it's important to understand the changes. A lot of this I'm not really don't think that's important. Bringing them to an end in early March. Okay, committee decided to continue to reduce blah 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 blah. So they're finally admitting they're gonna stop this balance sheet expansion. My favorite chart, right? If I can, don't seem to ever be able to find it. Right? Now where I keep putting it. Sorry about this. There you go. Okay, so you see this aggressive kind of pumping money into the economy. They're going to be stopping that in March. So again, that's a very kind of aggressive stance they're now starting to take. And we saw the equity market has been correcting a lot because of this expectation that they're going to stop with as much supporting as they've been doing. Committee will increase its holdings by at least 40. It's now reduced it to 20 and from 20 to 10. Okay. This is quite a big change as well here. They've scrapped this. Committee judges that similar reductions will likely be appropriate each month, but it's prepared to adjust the pace. Now it's saying it's not prepared to adjust the pace. Basically, they're kind of hinting to the market that they're seriously thinking about stopping, not only stopping, but reversing this, okay? That's my take from all these changes. So a very, very aggressive statement there for the FOMC. See, now you understand the FOMC. You can understand these statements and look for the changes. Use that little hack I told you about. You don't want to be sitting there whilst you're trying to trade and work out the differences, right? These are great. You'll find them everywhere. You can use this one, whoever this was. Who was it? CNBC, don't know. Never used that one. I just use whatever one I can find. Pops up on Google. Often I won't even check it on the day. I might, because I don't typically trade Fed days. It's important to mention. I don't typically trade Fed days. I just like to obviously understand what they're doing, because this will influence potentially how the market might trade for the next week, 2 weeks, 3 weeks, 4 weeks. So for me, I don't need to trade the Fed day. It's very volatile, and actually it's very quiet sometimes leading into the event, but it can be very volatile around the statement release as everyone's trying to make head and tail and compare, and it's not worth it for me. I don't trade it, but I like to understand it so then I can use it to kind of adjust my thinking for the next few weeks even. So that is basically the statement. There are some other interesting, in fact, one other thing you can do, another hack, and I know I'm covering some of this, where it says compare FOMC statement, right? Google is going to be your best friend for even my research reports, and I'll show you that later. You can do FOMC statement research, PDF, right? There's a reason I do PDF, because I've noticed, and I know this because I used to work in investment banking, and I know our research department, they publish everything in PDF, so it's a little hack. So what you can do in the past 24 hours or whatever, and what you will see is you will then get investment bank, at least quality, very high quality research reports because they publish them in PDF. Just a little thing I noticed, little hack that I'm willing to share with you, obviously as part of the course. Honestly, don't pay for any of this stuff. You don't need to. Change that to the past week, past 24 hours, whatever. Now look at this PDF. You can see I've looked at it. I did have a look at it. And I like to make my own judgments, but because you're quite new, have a look at what some of these banks and institutions are saying. Okay, look what this person has said. He's written this article. ING Bank, Federal Reserve admits rate hikes are coming soon. Oh God, I don't know what happened there. Sorry about that. Okay, do you see? We don't need to take their word for it. We know that. We just read it, right, in the statement. We just read it. Coming soon. And I just said to you, that's a big change from last time. They're now saying hikes are coming. And this will be the primary tool to tighten monetary policy. They're also laying the groundwork for shrinking their bloated balance sheet. Do you see? It's so liberating, I tell you. When it's nice to read this stuff, don't get me wrong. And I do read it. Because, you know, I'm the first to admit, I'm not the cleverest person out there. Maybe I made a mistake. Maybe I can learn something from this guy or whoever it is that's an economist. I don't read ING, by the way. I don't know. It's the first thing that popped up on Google. So, whatever. But the point is that I want to make sure, am I along the right lines? And if other people are agreeing with me, that's even better. I feel like I'm on the right lines, right? So what did we say? I said, hey, the Fed, do you remember we talked about the language change? Where they scrapped Fed statement comparison. Remember here, down here, they said that they got rid of it. Will likely, is prepared to adjust the pace of purchases. It ain't no longer, right? They've completely scrapped that, and that's why they're looking to potentially reduce the balance sheet towards maybe the end of the year sometime. And that's what it says here. They're laying the groundwork for shrinking the bloated balance sheet. Now he is saying, yeah, they are actually adding to it until March, but whatever. He's having a little dig at them, but whatever. Doesn't matter. That's his own opinion. Again, I don't necessarily agree with it, and why? Because I understand the statement. You see, you can now. You don't have to just. I want you to stop thinking of these people in institutions as some sort of god and they know everything. They don't. You know, I don't necessarily agree with what he said here. You know, he's saying, well, can't believe it. They're saying that they're gonna shrink the balance sheet, yet they're actually adding to it until March. To me, it makes sense that they're adding to it until March. Why not? Can't just suddenly stop, right? They've flagged it well in advance to the market. They're going to be reducing, I think it's around 15-20 billion a month. They're continuing that, right? They need to build credibility with the market and stick to what they promised. Can't just suddenly change that. So I don't necessarily agree with this comment. But that doesn't matter. Do you see? I have the ability to do that because I understand circular flow of income. I understand the Fed. I understand the dual mandate. I understand the Fed just as well as anyone else. Okay, and I'm going to have my own opinion because at the end of the day, I'm putting my own money on the line. Right, and I'm going to basically stick to my own opinion. But at the same time, I'm going to learn to see did I miss anything or maybe he's made a good point. You know, so that's what critical thinking is. And you can have a read of this, okay? This might not be appropriate at the time. Obviously, you might be reading this in a year or two. Have a look at whatever articles you can find, just to make sure that sometimes I don't even read them. Sometimes I will. Obviously, I've been looking at statements for so many years, and I stopped for a bit. As you know, during the time I built the Proem Foundation, I wasn't really looking that much. Recently, I have got more involved, but prior to that, I was looking for years at this stuff. So I'm very familiar with it. So sometimes I won't even bother reading other reports. Sorry, past 24 hours. Just you'll see loads. Okay, there's one here from UBS. I don't know what that is. Nope. They've obviously blocked people wanting to see that. But yeah, you'll be able to find others anyway. Just see if there's any others here. Yeah, interest rate news, you know, it's all from Reuters. traders pricing, blah 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 blah. So again, no need to pay for any research. There's Fidelity there, that one we just went on. They have some very good research. So yeah, that's the point. You'll be able to find some research, hopefully. We obviously found one there already. Latest analysis. Sometimes, because this statement has just been released in the last 24 hours, sometimes it will take time for some of the research to come through. I'm not going to show it here. There is one place I do look for some research that is quite quick with some of the research that they put out. So obviously have a look at it. It's always changing. Okay. Normally I don't look at the statement the same day because I don't trade it. I'll normally look at it the next day and I'll try to make my own analysis of it. And then I'll look at the opinion of others, maybe more closer to the weekend. Because to be honest, by the time I'm back in the market, it's already like Thursday, Friday. It's coming up to the weekend. So at the weekend, you'll see there's loads of research reports about FOMC because obviously a lot more departments will have published by then. But my point is you can just have a look at what's out there and compare it. Do your own analysis first, okay? Always make sure. Don't just cheat. You're going to learn nothing, okay? If you just go and have a look here. Maybe get rid of that. You can play around with the wording as well. See if that makes any difference. I don't know. There you go. Scotia Bank, right? They got one. There you go. Okay. Markets raised. Federal Reserve generally met most of expectations, but with important twists. Materially more hawkish stance. Remember I said it's very aggressive. Please see the accompanying statement comparison. Here, so same thing. We've already seen the comparison. Okay, so blah 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 blah. The other thing I wanted to talk about, right, and I just got reminded. You see why it's good actually to find some of this stuff. That's actually quite a good search term. FOMC statement PDF. Use that. Quite a few have come up with that. So that's another. Look, the ING one's there. This Scotia Bank one is there. I saw a different one earlier actually from, can't remember who it was, but this has just reminded me, they've said something about the Q&A. So I don't watch it, okay, and you can if you want. After the meeting, there is a Q&A. I've completely forgot to mention it. Let me just bring it up. So you will be able to see it. It's here, FOMC. Press conference, that's it. Okay, don't worry, we won't reach it.
At the Federal Reserve, we are strong, and these differences reduce the size after we begin.
Do you see there's a Q&A, basically?
Thanks, Michelle. Thank you, Mr. Chairman, for taking the question here. So year over year, inflation is at a 40-year high. The input costs for producer price index for all of 2021 was the high.
So the last question, okay, I don't really watch it. I find it a bit boring, I'll be honest with you. It's not that I don't think it's important. It's very important, and you'll see the market does react. You see how this journalist asks him a question and then he'll give an answer back, and see here you can see it goes on for an hour and there's a transcript and stuff, and you can have a look at that. So there is a Q&A. I don't know if they actually put it on here. No, they don't. It's a press conference. Yeah, click on the press conference. Q&A, you can find it there. Okay, quite important. I'll be honest with you, I'm not going to watch it. Okay, I don't watch it. I think you should watch it. Alright, I've watched it a few times and you can see how well I understand these things, so I don't really watch it. That's not to say that I haven't got much to learn, I have. Point is, I don't watch it because I just read the summary from these research reports. So can you see here, this chart, I don't know, I've never looked at this before, but I don't necessarily use Scotia Bank. I just found it on Google, just literally as I'm recording this I found it, using that hack I told you about in Google. See here, Powell was asked during the press conference whether hikes at consecutive meetings are on the table, etc., etc. Let's just say the markets didn't like the fact that he generally ducked all of these questions. Okay, do you see? I didn't have to. Otherwise, I would have to watch that thing for an hour just to find this out. So, etc., etc. Right? He was asked some questions, and these are the answers he gave, and some guy's done all the work for me. He sat there for an hour listening to it, and he's just told me the main bit. So, saves me having to do that. I'd rather be actually trading. I'm busy, even though I don't trade FOMC, so probably enjoying my day off on that day. I'll come back the next day. I'll have a look at kind of the summary, but the statement, I will look at the statement. I'll do the comparisons as I told you, because that is the most important thing. Next most important thing is this Q&A. I'm just being honest with you. I don't want to lie to you and say, hey, I sit here for an hour watching the Q&A. That would be dishonest of me. Okay, I'd rather be honest with you. And tell you that I don't watch it. I don't think there's much benefit of me watching the whole thing, because lots of economists will be writing about it, and I'll get as much as I need out of it. What I will do though is I will read the statement, okay, and then finally, this is the end of the FOMC section, and hopefully it's been useful to you. I know it's been very, very long, but it's been necessary. I want to put the minutes in here because I want to say to you that you should read the minutes, okay, which aren't released for another 3 weeks. In fact, there's one more thing that you should be aware of. Okay, so every other meeting they do release their forecasts. Okay, so if you go to where is it gone? It's not about the FOMC, is it? Such a vast website. There we go. Meeting calendars. They've done the statement on longer run goals. Right, they've just upgraded that. Probably haven't made any changes. I don't know. Just what their goals are and stuff. And I'm not clever enough to know what is said in this to the other. I'll wait for some economist to mention it when I do my research on the weekend, if it's worth any changes were made to that to the last time. It's unlikely. Probably just reaffirming it to the market. But there is the meeting minutes, okay, and also, just bear with me, sorry about this. Can you see this? Every other meeting, projection materials, projection materials, projection materials. I just want to mention, unfortunately they didn't have it in January, the month that we're looking at together, but last month they have it. Check these out, okay? Summary of economic projections. Meeting participants submitted their projections of the most likely outcome for GDP, unemployment, etc., etc. And I don't really pay much attention to this, okay, because it's notoriously difficult to predict GDP, to predict unemployment, and so on and so forth. And there's so much data to trawl through. I don't really bother looking at it. It's the median of the projection of all the committee members. I don't really look at it. I kind of just let the research, when the research comes out at the weekend or whatever I'm doing my research for, getting ready for the next week, some economist who's much cleverer than me is going to just say, hey, the projections changed slightly, they've become aggressive, they expect GDP to go up, go down, whatever. Okay, so that's what I do. But at least I understand what they're going on about. They've come in here, they've had a look at, what are the median projections for the unemployment rate and etc., etc., right? What are the projections here? And someone will say, the one thing I do like to look at, and in fact I've noticed the market focuses on this a lot, and it kind of makes sense, is this. It's called the dot plot, okay? Now this is quite important because what it is the midpoint of the target range participants assessment. So the 12 members of the FOMC, right, and you'll see there's 12 dots. I won't count them, but I think it's 12 dots, right? In fact, it might be all of the members. So how many is there? 3, 8, 11. Yeah, I think there's more. In fact, I think it's all the members, including the non-voting members. In fact, it must be. Sorry, I haven't looked at this for years, the actual definitions of it. In fact, yeah, it must be all the members. Remember, all the other Federal Reserve Bank presidents are also in the meeting, voting and non-voting. The point is, anyway, all the people at the meeting, right, the committee members, voting and non-voting, they'll say where they think the appropriate rate will end up at the end of the year. Okay, so you can see it's very important. ultimately they're setting rates, right? They're pretty much telling you where they think interest rates will be at the end of the year. So the midpoint for this would be here, right? Can you see that? It's called a dot plot, right? So what did the committee expect? Where did the committee expect rates to be? Can you see the midpoint? I guess that's the median. People like to look at the median, the middle number. The midpoint, sorry, is 0 to 0.25. That's what it means by, apologies, the midpoint. So where it currently is 0% essentially for all of 2021, obviously that was their expectation and that's where it was. Where I'm in 2022 now, the median expectation is essentially what? 0.75 to 1%. Okay, so the median expectation from the FOMC, okay, is for rates to go up 3 hikes, assuming they do 25 basis points each time. Can you see that? To go from 0 to 0.25 to 0.75 to 1. Okay, so it's what is it? 1, 2, 3 hikes is the median, the majority of members. Okay, and I actually suspect it will be more, but we won't get into that right now. But this is something the market looks at. You might hear this or me talk about this when I do my institutional Sundays, that the dot plot is suggesting that they've, you know, the next meeting, you might see this shift up to there. See, that's very hawkish. That's a signal to the market that the committee is erring on the side of raising interest rates more aggressively. So this dot plot, something I wanted to mention, that is the only thing I really look at in terms of the projections, because obviously making economic projections, we already know, can be notoriously difficult. That dot plot, however, is different because it's actually telling us where they feel rates will be at the end of a particular year. So very, very important. And there's also where are we? The minutes, right? So let's get the minutes up. It's the final thing, I think, and then we're done. And then you can take about a week off probably and recover from this mammoth triple session on the FOMC. Just make sure I'm covering everything. Okay. Meeting calendars. Just want to make sure I haven't missed anything. So the press conference, they call it the presser, some people. Press conference, the minutes we've talked about, the projections, economic projections that they make every other meeting. Okay, so this latest one that we've just covered, they didn't have one, but in the next meeting they'll have it with the dot plots we discussed. And then there's the minutes released 3 weeks later. Okay, now what I want you to do is I want you to read the minutes. All right. It's quite a long set. I don't read them. I have in the past, but because you might be new to this, I want you to read them. Okay. So you see here January minutes. In fact, it's not. The last one for me was December 21 minutes PDF. Minutes haven't been released for the latest meeting. It takes 3 weeks. Okay, all of this, I want you to read all of this. All right, developments, blah, 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 just discussion and what they were talking about. I'm going to go through this with you. But a lot of what we've discussed the last few hours is going to be coming up. Staff review of the economic situation, right? So obviously they've got their own economists, staff working for them. They'll be talking about, can you see it? The reason I wanted you to see this is why it's so important. I cannot stress this enough. Why the market pays so much attention to payrolls and inflation, these things in red, and surveys as well. You see them mentioned here. Okay, so it says here total non-farm payrolls, right? Can you see mentioned payrolls? So they're clearly watching payrolls. Unemployment rate, okay. Labour force participation, we talked about that already. Blah 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 blah. It kind of gives you a good. Inflation readings remained high, and various indicators suggested that inflation pressures had broadened. Total PCE price inflation, that's their preferred measure. We'll talk a little bit about that in the inflation section. Core PCE gone up this much. They talk about CPI as well. Okay, so they're clearly looking at that, surveys and all sorts. Okay, business fixed investment, and I don't even know, to be honest. Haven't read this for so long. But yeah, they'll be looking at this. They'll be looking at obviously surveys, things like the ISM, obviously early indicators of manufacturing output, services output, and so on and so forth. Okay, loads of things, really interesting. Staff economic outlook. Obviously, the staff will be telling them, this is the data we've collected. They'll be looking at it together. Lots of stuff going on. The whole minutes, I'm not going to bother reading all of this. What I do is, again, I use my hack. I really haven't got time to read this because obviously I'm full-time trading. I don't have time to read it every single time. It's good though, don't get me wrong. If I had time, I would do it. On the weekends, I do other research, and obviously I do my institutional Sundays, and I need to spend time with my family as well. I haven't got time to do everything. But I'll tell you a little hack. Same thing. Alright, it's a bit of a cheat, but honestly, this is brilliant. So what you need to do, again, FOMC minutes research report, PDF or something, tools, anytime, maybe the last, I think that was a month ago, so past month. There you go. Same company, isn't it? ING, can you see? Federal Reserve keen to, I just read the summary. Right, balance sheet shrinking, and this is basically a summary, nice couple of page summary. I'll try and find one. If I can't find it on the same day, I'll just look later in the week. I think without that, there was FOMC minutes research, maybe, don't know. Play around with it a little bit. Quite a bit of stuff here, isn't it? You can take your pick, really. There'll be loads of stuff. Can even try with Speechworks, which only returns FOMC minutes. So yeah, let's change this to any time in the past month. Okay. Brings back that same article. There you go. Something from Goldman Sachs, right? Economic research. Go and have a read of that. There's something about the minutes in there. Right, so really good. May actually make a note of that. It's quite good actually. OCB Treasury research. Okay, research. December FOMC minutes. Hog the higher. There you go. Okay, lots of stuff out there. Right. Stuff about the minutes. The December FOMC minutes did reveal some interesting nuggets of information. First, the comments on full employment suggest. You see 1-2 paragraphs, right? I'm not going to read the whole minutes. You'll be able to find lots of stuff out there, right? Be creative with how you search for stuff. That's how I find all my economic research, as you'll see when I do the separate section. I just show you where I find a lot of my research, but that's all I'm doing basically. And at the weekend, I'll just try and find some reports. I don't always agree with them. If I do, I do. If I don't, great. Hopefully that was useful. Really been enjoyable, as I said, to put this together. I think that's plenty, isn't it? It's about 4-5 hours. Incredible session on FOMC. You should have enough knowledge to really smash this to smithereens now. Like I said, don't get too disappointed if something's confusing or you're still a lot to grasp. Don't forget, you're just learning all this stuff now. It might take you a few months. Keep practicing every month. Compare the statements, read the statements, have a look at all the stuff I've been talking about, read about the FOMC, do your own research. This is something it will take, it can take about 6 to 12 months to understand how the FOMC works, the way that I do, and you may even get better than me. That is what I would suggest, okay? Spend the next 6 to 12 months watching, listening, seeing what they're saying. They make testimonies, like I said, and there'll be certain things that you'll hear FOMC members coming and talking and to the press and just talking in general, and then obviously the chairman doing his testimonies to Congress, and there will be some stuff outside of the FOMC. Generally, this is where my main focus is, right? It's on the not the minutes, but the statement and the lead up to it, and looking at payrolls and trying to figure out unemployment and what they might be thinking, and ultimately what I'm doing is trying to second guess what they might be thinking. And then when the minutes come out, sorry, not the minutes, keep saying the minutes, the statement comes out, and it kind of confirms whether what I was thinking was right or maybe not right, and make adjustments to my thinking and so on and so forth, in the way that I've already described, okay? And that's really all there is to it. At first it will be like, but it's normal, first you might be completely lost and thinking, hey, I don't understand, and what the hell is this statement, it's all over the place, and that's normal, okay? Because it is dynamic, it's a lot of information to take in. You just got to keep reading those statements for about 6 months, 12 months. It's like any job, suddenly it will become quite easy to read them. Then you can start to incorporate them into, obviously, your thinking, your analysis when it comes to trading, which we can have a little brief chat about, obviously, like I said, the analysis section. Because fundamentals isn't, final point before we close it off, fundamentals isn't about, what everyone's obsessed with. What do I do when this happens? Buy. It's not like that, okay? It's very dynamic, it's almost subtle. It gives you a nice little leaning or a bias or a slant going into a certain week. Just how you might be considering your positioning based on market reaction, sentiment, chuck in a little bit of, obviously, fundamental understanding, and it's combining all of that together, which we can obviously have a chat about towards the end of the course. But that is really a big part of the analysis is there. We've done it. Hopefully that was useful. I'll see you in the next section, where I think we're just going to be talking about inflation, a couple of other bits and bobs after that, and then hopefully that'll be over, and then obviously just have a little bit of a chat about analysis, and then we'll be done. So I'll see you in the next section. Don't jump to the next section straight away. Obviously take some time, maybe watch this whole thing again, maybe spend some time with FOMC, researching some of the statements and researching the website, making sure you understand all the things in these last 3 parts. Don't just jump ahead. Take your time, maybe take a week off, let it all digest, and then move on to the next section. But I'll leave that to you to decide. See you in the next section.